So in the previous video, I was explaining how to trade the trade line breakout strategy. It's a very powerful strategy that you can use in forex trading. So if you haven't watched the video, please find the link in the description box below and watch the video. It is very much helpful. But in today's video, we're going to look at the double top and the double bottom strategy. So usually you see my videos when I'm trading live. I'm trading the double bottom strategy and the double top strategy. Usually you will understand what will be going on. So I've decided to make another video explaining what to consider when trading the double top or the double bottom strategy. So before we jump right into today's video, please take a minute to go and subscribe, hit the like button, and also you can follow us on Telegram. We want to reach 10k in 3 months. So let's get right into today's business. So the first thing that you have to consider when trading the double top or the double bottom, it is just the same strategy but just a reversal of the other one. So the things that you have to consider when trading a double top are the same things that you have to consider when trading a double bottom. Okay, so a double top, okay, is in an uptrend, just as the same as the double bottom, okay, is in a downtrend. Okay, so when trading a double top in an uptrend, what you have to consider is the first thing is the high that was created. So for example, in this one we have this high that was created. So this high marks a point where the market created a very high peak that hasn't been reached in a very long time. Okay, so as you can see, this one is an uptrend from this point up to this point. So this point is the latest high that was created. Okay, so after the market creates a high, it then pulls back to create a higher low. So the higher low was created at this point. So after the higher low, the market continues to push upwards. So in a double top strategy, after the market pushes upwards, it fails to break the point that was created by the latest high. So at this point, I'm going to put an order block. So as you can see, this order block marks the point that was respected twice by an uptrend. So as you can see, this point couldn't be broken into with the market, so the market failed to break upwards twice. Okay, so this formation is known as the double top. So now we want to know how we can monetize this strategy. So in an uptrend, let's say for example like this, the market, as you can see, is making pullbacks, and then it continues, and then makes another pullback, and then it continues, and then it makes another pullback, and then it continues. So the latest pullback that was made before the double top was completed is known as the neckline. So at this point, the latest point is this one. This is known as the neckline. And neckline is very important in the double top strategy, as it assures us the market is going to reverse. So this is a type of a reversal pattern that we have to use. It's very powerful. As you can see, we put another order block here. So this order block marks the point where the market has to reach in order for the double top to be complete. So this neckline is a point of confluence that was created previously. So now we want to know how to enter the market in a setup like this one. So the first point that you have to consider is after this second top that was created at this point, but candlesticks, can we say? Okay, so at this point, as we can see, there's a bullish, there's a bearish engulfment. So a bearish engulfment marks that the market may reverse or it marks that the bears have more power than the bulls. So as you can see, the market after this point, it started retracing back. It started selling like this, going downwards. But we can't just enter at that point because it might be a fake out, just to check those people who sell early. So the early sellers may be trapped, and then the market will continue going up. So in order to avoid that, we have to wait for the market to reach the neckline. Don't worry about the profit that you couldn't take at this point, up to this point. It's okay, you can just take the rest of the profit and then you can be satisfied. You shouldn't be greedy in the market. Okay, so now moving on. Now we want to know when to enter the market. So as soon as the market reaches this neckline, that is where we can safely enter the market, because now we have assurance that the market is selling. So let's say, for example, at this point, right? So at this point, the market can sell up to this point, like this, and then you can just collect your profit and then leave the market. So usually people are confused when trading the double top, because they usually sell at this point. No, that is wrong, because the market cannot just start retracing without further confirmation. Okay, so as you can see, like at this point, this one is the first top. We can confirm that this one is the second top, but however, the market did not retrace up to a point where a double top would normally do. So it means it's a fake out. That is why I urge you to trade at the neckline. If this market had reached this point where there's a neckline, I would safely say you can enter the market, because it is confirmed that the market is selling. So enough of the double top. Now we move on to the double bottom strategy. It's just the same but reversed. So as you can see, this one, we're going to put our order block again. Let's put our order block. So this order block marks the first bottom that was created, and then the second bottom that was created. So after identifying our first bottom, we have to wait for the market to go up to form a neckline, and then it has to come back. So as you can see, the market went up just to form a neckline like this one. So it formed a neckline, and then it came back to form the second bottom. So after forming the second bottom, you can see that there was a bullish engulfment, which means that this bullish candle was far much bigger than the bearish candle that was formed previously. So this is a signal of the buying power that is in the market. But however, we cannot enter this market because it is not safe to do so. The market can continue selling. So what we have to do is we have to wait for the market to reach the neckline, and then we can safely enter the market. So like this, at this point, it reached the neckline. As you can see, it reached the neckline at this point. So after reaching the neckline, we can safely enter our trade. We can safely buy and then take our profit and then leave the market. As you can see, after the neckline, it went up very, very high. So let's say, for example, this one is covering our buy position like this, and then you adjust it like this. Let's say it's covering our buying position, and then for this one is the stop loss. I'm going to put a stop loss here. Okay, like this. For the stop loss, we put a red one. Okay, let's get this one. Right, so you can safely enter the market and then take your profit and then leave the market. So this is what I have on the double top and the double bottom strategy. Please let me know what you think in the comment section. Please don't forget to subscribe and like, and also you can follow us on Telegram. I also do account management and mentorship. You can just hit me on the Telegram channel. I will be able to assist you. So bye for now.